Hello everyone, welcome to Tukitake's webinar on AML compliance, our second one in the three-part series, Crossing the AI Chasm in AML CFT. I am Abhishek, founder and CEO of Tukitake. We are a global RegTech company providing machine learning powered end-to-end AML analytics to financial institutions. I will be your host for this webinar. Today's webinar will be structured in the following manner. Introduction to the topic and speakers. This will be followed by discussions on common barriers to implement AI systems in AML CFT industry and key recommendations from our speakers. Next, we will dive directly to panel discussion addressing the elephant in the room. How do we operationalize AI? And finally, end with questions from our audience. In the first webinar series, we discussed the short-term and long-term trends of COVID-19 with specific examples on the AML compliance space. As digital banking gets a reality check in the crisis and technology sophistication becomes a need than luxury, our speakers and audience unanimously agreed that new technologies like AI and machine learning can help build an agile AML system resilient to market and regulatory changes. Although we have industry consent that AI and machine learning can be helpful, yet deploying AI is new and hence unknown territory. Most AI projects are stuck at pilot stage. During a recent survey across North America, EMEA, and Asia markets, we found out that AI deployments are perceived to be complicated, expensive, and not regulator ready. So today's webinar, we will focus on addressing the common barriers surrounding AI ML implementation in AML programs, and more importantly, tips to achieve scale and quicker time to value. Let's find out from our eminent speakers. Our first speaker is Colin Whitmore, a CAM certified senior analyst with IIT Group, having more than 20 years of experience within banking and financial services. Colin's areas of expertise include anti-money laundering, financial crime compliance, data and analytics, know your customer, machine learning and AI, and sanction screening. He previously worked with banks and financial institutions, including Barclays, Royal Bank of Scotland, HSBC, and Aviva, and advises on the use of innovation and new approaches to compliance challenges. Our second speaker is Sean O'Malley. He's a risk executive and thought leader in the financial services with 20 plus experience. CAM certified Sean has a proven track record of providing leadership and innovation in AML risk and compliance at tier 1 financial institutions, including State Street, Santander, Citigroup, and Morgan Stanley. His area of expertise include AML and sanction risk assessment, customer risk rating methodology, AML product and country risk ratings, operational risk modeling and analytics. Sean currently works as managing director at Integrated Risk LLC. At this time, I'm going to turn the program over to Colin, who will get us started. He will start with industry trends, discuss the current concerns related to AI implementation across banks, and make recommendations to a few problems. Please note to our audience that web seminars are enhanced by participation. We really encourage our audience to send us questions, which we will get resolved once we get them. Colin, over to you.
Thank you, Abhishek, and hello everyone today. So from our experience in the IT group of speaking to executives, doing surveys, financial institutions, we're seeing a number of things at the moment, and obviously COVID-19 has a big impact, but we're not here to speak about that. But along the lines of that, we're seeing an increased complexity of threats. So what do we mean by that? Well, you're seeing new actors or more sophistication of existing actors. Actually, you're seeing state actors very much involved, talking about espionage, but also current criminals looking at how they, in a virtual world, can they use cryptocurrencies, faster payments, changing methods. So how are they working to circumvent the controls that financial institutions are putting into place? And one of the issues is the more financial institution gets to grips with the knowns, you've got this issue of the unknown unknowns. What's out there? What are the things they're not actually looking at? And an example, money mules, for example, that's been around for a while now, but it's coming. We've seen a lot of it and a lot of reports from our customers of it's coming to fruition more and more along the lines of, people in the current climate without jobs, looking for means of earning money, unwittingly getting caught into this area, and criminals becoming more sophisticated, moving payments quickly, so that there may be a trial, but it's over and done with, using different institutions, which has always been an issue. Then, banks, financial institutions, payment companies all struggle with the volumes of data. And data's always been a big issue, getting data correct, getting it uniformed, having good quality data. But actually what we're seeing now, we're moving beyond where they had their own data, transaction, account, customer data. And we're seeing data produced by automated systems. We're seeing IP address data, machine data. We're seeing social media data. And whereas before data may have been much more uniform and structured, it may have been poor quality. Now we're having unstructured data. How can you get meaning out of unstructured messages, payment messages, trade finance contracts, as well as just general communication and text? How can you get meaning out of that and identify real issues within it? Institutions are part of the real world. Currently, obviously, there's recessions or constraints on economies. Banks and institutions have to be careful how they spend their money. They don't necessarily have a luxury, and what we're hearing is that either big programs are being shelved or big programs are being put on hold. They don't have the luxury of spending endless amounts of money over a long period of time, usually with improving their compliance systems, or that's monitoring, customer take on. They need solutions which are agile, quick, and low cost really, and can be put in. When we've spoke to our customers, and we've just done a survey on the use of artificial intelligence for AML and innovation, they know, banks and financial institutions know about AI, machine learning. The executives I spoke to were well informed, but there's still barriers to overcome. Some of these are real and some of these are perceived. And if we move to the next slide, I'll give you an overview of what I'm hearing from our customers when we speak to them in the industry. So there's an idea, and this has been perpetuated a little by the machine learning community, unfortunately, that you need vast amounts of data. What I think they're actually saying is that more good data helps. Clearly, if you're, let's say, in supervised learning from alert decisions, the more alert decisions and learning you can put through, the better your models become. But it's not a prerequisite that you need massive amounts of data. And again, I think this is high perceived costs. Some of that, I think, is because of poor education. So executives know they need to use innovation, but there's so many different forms, so many different vendors, it's difficult for them to understand. And they believe, based on past experience of other solutions, that it's going to be costly. And again, we'll explain further, but I don't think that's really the case. This one is critical, the idea of the black box, the idea of being able to explain to it, and that's the firm itself being able to understand it so that they can explain it to their regulators primarily, but also for people working in compliance, so they can explain it to their senior executives. And importantly, is it improving the risk detection? Is it mitigating risks? We've seen in the past with other types of solutions that it can take a long time to get the return on investment, a long time to make an impact. And that's important. Firms now need to be able to put solutions in which actually make an impact within months, not years, so that they can start really dealing with the issues they've got and gaining some of the efficiencies which are after. And I think the following two follow on from that. I think speaking to people, this is more perceived. And again, you can't blame executives for this because they're based on their current experience and what they've done with, say, on-prem solutions, with the data mapping, with the creation of rules, processes, procedures. And they believe that's the same. But again, I think we'll look at this further. And the integration, this is a big issue for, I think, any institution, except maybe a new startup where you're starting from fresh. You're going to have different data sources, you're going to have different processes, maybe different case managers. So, how can you integrate a machine learning solution into that, whether it's of a data take on, whether it's returning or managing results? But again, is that a real issue, barrier, or is it more of a perceived one? And I think with all of these, really, some of it is knowledge, and some of it is how you go about on the implementation, and things like whether you use APIs or not. What I'm going to do on the next slide, thank you, if we move forward, is just look at a couple of two of these, which important ones. And I think this is important. Let's break them down. And with all the barriers, they can really be broken down. So this idea, massive data, as I already explained, yes, the more good data. But again, I'm using that word good data. I think, what's important here is to have a set of good data which you can learn from. And it's an iterative process. So you put the data through, you look at your results, you learn from it, you understand which data items have an impact, which maybe don't, which have a negative. Ones with a negative, can you improve them? Can you exclude them and still get a good result? And then choice of AI models, and this is an interesting one we're finding. I think there's an evolution going on here. What's happened in the past is that a lot of the vendors, talk in this language, rightly so. But on the other side of the coin, the bank executives and compliance officers are confused a bit. Supervised, unsupervised, you can understand the high level definition, but then when you start going down and speaking about algorithms, techniques, but actually what we're finding really is it shouldn't be the compliance officers deciding one algorithm or another, one technique or another. Their driving concern is, does it make my controls more effective and more efficient? Does it identify not just the known risks, but does it identify the unknown risks? And I think working through this process, the idea they need massive volumes of data before going ahead, can be overcome. And again, the perceived costs. There's a process here. Actually, what we're finding when we speak to our vendors of what we have an awful lot in the machine learning innovation space is actually they're all about agile. And I think this then plays into the corporation, the firm. Are they able to move in an agile manner? Can they apply AI controls in a limited capacity, maybe for a certain line of business, a certain business issue, using an API approach so that integration costs are reduced, and using an automated, as far as possible, modeling and models so that that stage can be easily explained and they get past the transition slide of it. So, I don't think that these barriers are necessarily things which can't be overcome. In our experience, there's a process which firms are moving through, working with their vendors, who are also appreciating that firms need to move through this, and then these barriers can be broken down and they can have successful implementations. Thank you. I think that covers my part for now, Abhishek, and I'll pass it back to you.
Thank you, Colin, for such informative session and idea. What I really liked is that you were candid enough to call out those common challenges and provide your thoughts to resolve data availability and keep costs optimal while implementing the machine learning systems. From our inception, from Tukitaki's inception, we have always invested in building a core machine learning layer that focuses on three key principles. Number one, standardized data model for monitoring and screening, automating the model building process, as this is an area that needs maximum time and effort and cost. Number three, continuous learning so that our customers can see value over time. That being said, let's now move on to our next speaker, Sean. As a veteran and an industry practitioner, Sean will share his thoughts on the industry insights and focus on two specific key areas and challenges. Number one, machine learning being a black box, and number two, ROI realization. I think these two are key components of the operationalization process. And over to you, Sean, to hear about how can we get over this the two key challenges that we face in the industry.
Thank you, Abhishek. So I want to sort of set the stage a little bit and talk about things from a practitioner's viewpoint. And that's going to be dealing a little bit with what practitioners have experienced in the past that usually informs their decisions in the current moment, as it were, and sort of what their viewpoints are in general then. But just so that you understand, I will be making some references to historical or legacy ways that things used to work that a lot of anti-money laundering specialists have experienced it. And part of it is to understand the reluctance of practitioners based on those past experiences. So first, there are three primary things that I have here that really influence the challenges that any practitioner faces in looking to improve their anti-money laundering program. The first, of course, being the ever-increasing complexity of threats. Those of us who are practitioners are well aware of the fact that every time that we develop better ways, better techniques, better methodologies, better models, whatever it is, better technology, to be able to identify potential anti-money laundering and or potential sanctions violations. But I'm going to focus primarily on money laundering for the purposes of this discussion. We know that the bad actors out there, the money launderers themselves, are always developing new methods to commit those crimes. And that's one of the reasons we've seen cyber financial crimes really increase in the last several years. As many of us know, there's actually state-sponsored cybercrime that is going on out there. There are a number of nations that basically set up groups and fund them with the idea of going out and committing cybercrime, and eventually those groups become revenue centers, if you will, for some of these countries, and at least achieve some of their political objectives as well. And what I was alluding to earlier, the patterns, the methods, the mechanisms by which money laundering is perpetrated are increasingly complex. They're always changing. They're always trying to stay one step ahead of the whatever is being done within most standard anti-money laundering programs. So if you have a standard set of rules that you are using, the perpetrators of money laundering will always try to find the gaps, the holes in that process, the weaknesses that they can exploit, even if momentarily, because that's what they're looking for, to be able to get around some of the rules that you've got in place. And they will develop more complex mechanisms that will trip up those rules or bypass them. We've also seen this, and I was actually glad to hear Colin reference it, the surge in fraud reports. Now, this is something that is specific to both sort of historical time, but also specific to the time that we're in right now. Colin alluded to the fact that there are people out there that are more stressed economically, strapped. They're looking for ways to make money, to have more of an income, and that makes them more vulnerable to the fraudsters. So we are seeing a definite significant surge in that sort of fraud activity based on the current economic stress in the environment. So, I mean, one of the things that I want to keep in mind with this increasing complexity of threats, and I alluded to it a little bit, is that when you've got a series of rules, which is what a lot of anti-money laundering programs established, for their transaction monitoring and KYC and other things that they typically use, it's very rote. And the problem is you've got perpetrators that are always trying to find ways around it. And one of the challenges from a legacy perspective is you can't really use yesterday's solutions to solve tomorrow's problems in anti-money laundering. And the legacy way that things have been operating, that's really what, in essence, has been trying to be done. And you'll try to, and to enhance the program, organizations will slap on new rules or try to find ways to keep patching the holes as they find them, which does improve the AML program, I suppose, but it's not, it's more of a reactive rather than a proactive approach to managing your anti-money laundering. Let's move on to the second point and talk about something that's very important. Yes, the growing volumes of data to analyze. Colin referenced it as sort of the perception that in order to use machine learning, you've got to have lots of data. I think that's a very common misperception, and the way that I think about it as a practitioner is that no, machine learning doesn't need lots of data to be effective. It's more effective if you have more data, yes, but it's a way of being able to analyze the data in a consistent way, in a more automated fashion, so that you're able to analyze more data and more sources of data. And that gets to the first point that I have underneath, which is the evolving regulatory expectations. So for those of us on the practitioner side, every time that we have our periodic meetings with regulators, inevitably the question will come up from the regulators, what are you doing to improve the program? In what ways are you trying to enhance your AML program? And that sort of goes under the umbrella of heightened expectations, heightened regulatory expectations, which keep being heightened and heightened and heightened. And the challenge is that if you're dealing with a reactive approach, where you're trying to patch the holes as you find them, you can talk about the holes that have been identified in the last, whatever relevant period you want to discuss, and what you're doing to fix those holes, which is, again, something to be done, but very reactive, not very proactive. One of the other changes in data volumes that I wanted to reference, and this is more specific to what we're seeing in the COVID-19 environment, is, of course, there's been a significant migration from a lot of the in-person interactions with banking institutions. So we've really migrated significantly away from bricks and mortar, because people are trying to make sure they're not exposed to COVID-19 more than they absolutely have to. And there's more and more activity that's going through online or application-based processes for transactions and money movements. And so that brings us to our third point of, and some of this is legacy here. So I'm primarily going to be looking at the increase in compliance costs from the legacy perspective, the way that anti-money laundering programs have traditionally been run and managed. And the first point, of course, is the spiraling manpower costs in most organizations. The legacy approach is that the more customers you have or the more transactions you have, the more staff that you need to be able to perform the KYC, do the periodic reviews, to do the transaction monitoring, because those are all activities being done by individuals in a relatively manual process. Not to say that they're doing it all with old-fashioned paper, but they're sitting in front of a computer and running through a process that way. But the point is that the staffing model was very linear. So as your customers increase, the number of customers increase, or as the number of transactions increase, you have to increase the amount of staff in a very linear formula. So, based on the number of transactions you're gonna be processing, how much staff you're gonna need to be able to run through and process all of that transactional activity. And then the second point is historically low returns on technology investments. Again, this is the legacy perspective. So, and I think Colin alluded to this in his references. A lot of executives that are making decisions with respect to anti-money laundering programs base their experiences on with technology and software, with sort of the legacy software development process, which typically has three components to it. There's this very significant spend, so there's a big capital commitment. And in today's environment, that is a very challenging thing to get from any bank's board of directors or get executive management to commit to spend. Second point is that a lot of that software development takes a very long time before anything is realized. So there's this whole ramp up process and build out process, and yeah, come back to us in 18 months and we'll see what we've got. That's not an uncommon statement. I'm sure some of you who are used to hearing that with the legacy software development process have heard, timelines along that line. And the third thing is, and I think this is really the worst one, unfortunately, is the delivery. Once the software development is complete or nearing completion, or at a stage where they're starting to put it into operation to execute on it, it almost invariably delivers short of expectations. So those are the things that drive a lot of the thinking with senior management that are making decisions with respect to anti-money laundering programs. So you can understand why there is a reluctance. And I think some of the things that were referenced with Abhishek was, that it's complicated, it's expensive, it's not regulatory ready when they hear, thoughts about machine learning. But if I could, I'd like to go to the next slide and go through some of my recommendations about how to overcome some of the barriers. And I also, of course, as a practitioner, I've got to have one story in here. So I will get to that shortly. So the first point is the perspective that money laundering is a black box and difficult to trust. I'm actually going to start with a third bullet with a firsthand example of bank senior management that was presented with the possibilities of what machine learning and artificial intelligence could do for their organization. Now, we're dialing the calendar back a little bit here. This was about 7 years ago. And I was in a room with all of the senior management, all the senior decision makers in the anti-money laundering program, a very large global institution. And the person making the presentation was an outside vendor, very well known, very high profile technology company. And this person was a data scientist and was going through how they think about the process of machine learning and how to use artificial intelligence. And the reluctance, the immediate sort of knee-jerk response from the executives in the room was unanimous and pretty sharp. They clearly did not trust that moving into an environment where the machine is going to be telling us what to do. What do you mean? You don't have people making decisions here? And I think that was that sort of knee-jerk response, that perception that we're not going to be in control from senior management is one of the things that makes it very difficult. They view, machine learning as a black box, difficult to trust, right? And the things that we need out of a machine learning process is that, yes, the models need to be explainable, due to the model risk management requirements foisted on us by the regulators. We need to be able to document and explain exactly what's going on with our models, be they rule-based, as is the legacy process, or be they based on machine learning and artificial intelligence. The second point is, yes, the model predictions need to be contextualized for AML managers and investigators. In other words, the results need to be usable and useful in the process. For example, if you're doing a periodic review and reviewing more information that's coming in from social media sources that indicate that there's a possibility of negative news with respect to a particular corporation or customer, or investigators are getting more information now that informs the transaction monitoring process, and they're trying to disposition a particular alert that has come up. They've got to understand what that alert means to them and how to be able to use it to make the appropriate decision on a risk basis as to whether it is relevant and important or is not. So the things that obviously scare some of the executives, just to sum up, is the idea that the machine learning, the machine learning means the machines are learning for themselves. That's for a lot of executives, that's a big leap of faith to make, which is why I kind of like the title of this presentation, crossing the chasm. That's very much what it feels like from a practitioner's perspective. You are standing at the edge of this chasm, and they're saying, go ahead and jump, because the machine's going to get you to the other side. And based on the experience a lot of practitioners have had, it's that IT and the standard software development cycle has often let them fall down that chasm. So there's a natural reluctance to understand, why they should move in that direction. Also, the idea that the machine learning process has no preconceived ideas of the relevant risk factors or no biases. Most AML programs run on at least on a legacy perspective, on a fairly rigid set of risk factors that they deem relevant and ways to look at risk in the anti-money laundering space. So to say, yeah, we're going to take a lot of that away is very frightening, because that's largely been the safety net that most of those practitioners have been using as they've been working in anti-money laundering programs. But if you can convince them that you can use machine learning to identify new patterns of AML activity and more complex patterns, using more data, different sources of data, being able to look at the problem from a different angle, that's where I think the benefit is. And now we're sort of teasing the ROI realization, so let's get to that. Many of the things that make machine learning beneficial is that, especially if you move away from the software, the SDLC, the software development lifecycle, and move to an agile environment, which is something that Colin also mentioned, is that the time scale for adoption or implementation can be made in a more rapid fashion. A number of, you can start off with a pilot project, and I think there are a fair number of institutions out there that are sort of running pilot projects right now in the machine learning space, sort of seeing, can it work, could it work? And with the use of pre-trained and tested AML models, what I mean there is that this is sort of like utilizing the set of scenarios that automatically come with a transaction monitoring system, because most institutions that buy a transaction monitoring system run those scenarios that they get sort of out of the box. And that's what we're sort of talking about here, except on the machine learning side, and their AML models that have been tested and trained and are in use and can be used for that sort of champion challenger process with respect to model risk management. And the final point, I think, is what really drives home the point, which is, it's low model maintenance cost. You do not have a linear staffing model anymore. You have a staffing model that relies on a different set of skills, different sorts of experts, fewer head count, more technology-based processing. So, I think that there's a lot to be said for machine learning in the AML space, and hopefully some of these points will help executives overcome some of the barriers in their thought process to moving forward to what can be a much more data-rich and more effective way to manage your anti-money laundering program. Thank you. Back to you, Abhishek.
Thank you, Sean, for the views and the first example you shared. I do agree with you, and focusing specifically on the black box distrust in ML, right? And in our view, explainability is one of the most sought out problems in machine learning world. However, there is no formal consensus of how an explanation needs to look like. And that is one of the biggest challenges because there's no right and wrong answer. At Tukitaki, we started our research on this topic since early 2017. Um, as first principle thinking, we invested on this core problem to give our clients a better understanding of the machine learning models that we deliver to not only help make decisions that they do, but also help explain the decisions in simple English. We have a patent on explainability on AI models in 2019, and we spend significant amount of research to continue to make enhancements in this area because we really believe, as you rightly pointed out, that being able to explain and move away from the black box to a more glass box approach would be one of the key things to get out of this barrier on AI implementation. With this being said, I would love to move to a panel discussion addressing the concerns around how to operationalize AI. During this interactive session, we will be launching polls to engage our audience and collect insight. So I would request our audience to keep a watch on your screens and would really appreciate your participation. So moving to the topic on the panel discussion. So what we generally understand, compliance teams are already burdened with challenges in their current AML processes that sits largely on IT infrastructure, which is very difficult to rip and replace. So having said that, I would like to ask Colin, what do you think are key considerations financial institutions should make as they embark on their journey? Because as I understand, you have been actively helping customers, clients on this sort of decisioning process. So over to you, Colin.
Thank you, Abhishek. And I think there's two levels here. First of all, at a overall, if you like, risk level, where are they receiving, where are highest levels of risk and issues in managing that risk? Is it certain lines of business, as I mentioned before, maybe trade finance or correspondent banking? And then also, interestingly, really within the AML process, or AML lifecycle is sometimes called, where can they make most gains, both in terms of effectiveness and also efficiency? Is it during the take on the KYC onboarding? And we're seeing, obviously, in the current environment, digital virtual onboarding, so that's a whole new area which needs controls around it. Or, is it further down the line in some of the reviews, the screening, the monitoring, the case management? So really looking at where those solutions are going to be targeted. And as both Sean and myself mentioned, not taking on the world, but an agile approach and looking at that. And then really, I think, working with a vendor in a partnership model. Do we want to take the poll now, Abhishek, in that case?
Sure.
Okay.
But we can continue the discussion and the poll can happen.
Yeah, sure. So, really working with vendors, I don't think it needs to be a them and us, but, share an idea, share an approach. And I think what we've seen with a lot of the vendors we speak to is they're actually helping to educate their customers, helping to educate the teams around models governance, senior management as to what they can expect and what the benefits are going to be. Then I think, another area, and we've discussed this slightly before, is the integration. And I don't think it's just infrastructure and architecture, but, where are you getting your data from? What's that data look like? But also you've got your inputs and your outputs. So where are those outputs going? Is it an API approach? Is it a batch or real time? So thinking through this against business need, there's no point having real-time controls if really the process moves slower, but then on other processes, maybe it needs to move quicker. And in real time would be fine. But obviously an API allows you to do that. And really how you integrate into the processes a firm has. So for example, case management. that firm may not want lots of different case managers, workflows. Can it integrate into their core enterprise case manager, bring the results into a user interface that people already use and are familiar with, that helps smooth the process? And I think the final, and it goes a bit to the transparency, but also how secure and resilient. So the same controls and rules, if you like, which are ensured for particularly customer data, but other data as well, and systems and processes which in the past have been on-prem and managed solely by the firm. What controls exist? I think this goes back to working in partnership with a vendor, looking at that. How is data and processing done on the vendor side? Is it multi-tenancy? What are the safeguards, certifications? And is that process auditable? So I think there's a number of considerations there that firms need to go through. But I think highlighting a couple, tackle the areas of priority, bite-sized approaches, and working closely with the vendors, I would say on that. Thank you.
Thank you, Colin, for your thoughts. Sean, as an industry practitioner, what is your take on the subject of making AI in production?
Yeah, thanks, Abhishek. I guess I'm going to spend just a minute to focus on something that's near and dear to my heart and get on my data management, data governance soapbox a little bit. The one thing that I see a lot of institutions do is they will work with a vendor to implement a new system, their shiny new toy, as it were, and they will forget that shiny new toy, whatever it happens to be, whatever that new technology is, you need to focus on the very boring but very essential aspect of data quality. And I think you actually alluded to it earlier. One of the 3 points, right? Sanitizing the data. And it's basically the same thing. You want to make sure that your data is fit for purpose. Because what you're trying to do with your machine learning is you're trying to move again to that new model where you're moving away from large amounts of staff doing processing to smaller amounts of staff with different skill sets, like data scientists, people who aren't just sort of clearing alerts, but are actually looking at money laundering risks. So it's a different skill set there that you're going to be looking for on the staffing side, and you're going to want to get your data quality up so that your data management process end to end has a significant degree of integrity to it, because then you will get better results. You will get more value out of it. A couple of things that I wanted to mention in that data governance process that are important to consider are data privacy issues. You've got GDPR in Europe. Some of the US states have state-specific privacy rules. You need to make sure you're going to be able to comply with all of those. You need to get everything in, go through all the preparatory stages of production to be able to produce results with your models. And again, through your model governance process, as I alluded to earlier, having that champion challenger possibility and potential with using AI and machine learning offers some real benefits to demonstrate and illustrate to regulators to meet their expectations, again, that you are undertaking efforts to move your program forward in meaningful ways, and you do have a good champion challenger process that's managed under the umbrella of operationalizing your AI and machine learning.
Thanks, Colin and Sean, for sharing your views in this topic of operationalizing AI. One of the things that I would love to hear from Colin, right, that just to summarize the broad discussions and the points, would you like to share any concluding thoughts for our audience as a key takeaways or messages from the webinar as an industry analyst on few key points that they should remember as a takeaway for making decisions in the AI onboarding process? Would love to hear your concluding thoughts so that these are a few of the things that they can use as takeaways. Colin,
Yes.
any
Yes,
sort of
certainly, Abhishek. Thank you for that. And if we go on to the next slide, right. So again, and it's summarizing a lot of Sean and I have said, and what we're seeing as successful uses of AI and machine learning, areas of most need, don't take on the whole organization, augment what you've got, replace certain areas, high risk areas, areas of great inefficiency where you can gain some efficiencies, you can make your controls more effective, you can satisfy your regulator that you're doing something in these areas. Then how are these solutions going to fit in? We know that organizations have lots of different data sources, lots of different systems, processes. The solutions can't be too hard to implement. They can't be too hard but people can't use them, but they've got to open lots of different screens. So this idea of, does it feed back into the case manager? Does it integrate seamlessly with the data? Is it easy to work with? And APIs have given us a lot of that. And then along those lines, if that's thought through, the idea that organizations cannot wait for months and months to implement systems and see positive results. Things need to be possibly incremental, but the agile mode. You put it in a short time scale, you start getting benefits, and then you start expanding out across new areas maybe, or more cases, and gain from there. And as you gain efficiencies and effectiveness, it feeds back through. And as Sean and both and I have spoken about, but this idea of trust and transparency, you're taking, if you like, ownership, you still own it, but actually some of that decision is potentially being made by machine or machine influence. Well, how is that accountable? How can you explain it? And that's within the firm. So compliance managers to their security teams, to their audit, to their senior management, but then ultimately, how can the firm explain that to its regulators? And we've seen that happening quite a lot, and regulators through sandboxes and innovation hubs starting to move towards this area, which is also great. And I think Sean mentioned champion challenger, so the models governance. You need, as in any process really, you need a degree of independent oversight and review within the firm to say, right, models governance, can our own people, our own data scientists understand what the vendor's proposing, work with the vendor to understand it, and give us a level of confidence around that? Can we challenge them? The firm needs to have educated people itself who understand it so that they don't just tick it off and say yes, but they actually look under the bonnet, look under the hood, and really ask those difficult questions to make sure they're satisfied, so that when their managers and their regulators ask them the difficult questions, they can be satisfied, they can provide the right answers, and they're happy with that as well. So those are key things I think we've heard throughout this webinar, and things we're hearing, which all done correctly can help towards successful implementation and use of AI and machine learning. Thank you, Abhishek.
Thank you, Colin, for that. I think I just wanted to add a few points from my own as an AI practitioner. In our experience working with global and local banks, there are three takeaways that we have seen, which are very critical for implementing AI-based approaches in the AML space. Number one, what we have seen is being able to build generalized models which can withstand performance and underlying changes in rules and thresholds is key, because we always see the thresholds and alerts logic change. Having able to build machine learning models which can really stand to those changes are key elements. Number two, as you rightly pointed out, champion challenger ability to refresh those models so that they are relevant over time is critical. What we have seen is building, refreshing the entire process takes time, and hence being able to automate that process is a key element. And number three, as we all discussed, not only explaining the models but also explaining the prediction is a key element for broader adoption. So just summing it up, generalized model, champion, challenger, and not just explaining the models, but explaining every prediction in a business explainable way are, in our mind, as an AI practitioner, key takeaways in addition to what you guys said. With this, I would like to thank both Colin and Sean for being part of this webinar series. I believe it was very helpful for our audience, and they have some insights to be better prepared in handling some of the key objections to implement AI in AML program. We have received a couple of questions from the audience, and thank you for being interactive. But I think we can get into at least one of them. And I would like to, invite Sean to answer that question. The question that I got was, how do regulators view the current technology sophistication in AML CFT from an industry practitioner's point of view? Sean, over to you.
Thank you, Abhishek. I guess the best statement is that, and I think we alluded to this earlier, there is not a particular consistent response from the regulator, so it really depends on the individual regulator that you're dealing with. I think they're getting more accepting of using machine learning and AI, but I think the black box aspect of it made it challenging for them to sort of make what they feel like is a bit of a leap to accepting what can be done with AI. But I think that's why the pilot projects are very important. If you can demonstrate that something can be successful, I think that's the way to win them over. And as I said, the acceptance is getting more universal, but you still have a few holdouts that are reluctant.
Right, and just to add on, in our experience, FinCEN has also opened up interactive sessions to speak to both financial institutions and fintechs to explain their approaches, and I think that can also provide some insights for banks and financial institutions to understand their point of view as well. We are one of the companies which are invited to that session as well, and hopefully as we meet them and we present ideas, happy to share with the broader audience as well. I think we can take one more question, and I will invite Colin for that question. The question says, with AI enabled AML systems, from an analyst point of view, how can compliance team at financial institutions develop meaningful measures for both efficiency and effectiveness?
Okay, yeah, thank you. This is an interesting point, and it depends on the institution. Some have experience of doing this already, and obviously some of it is a comparison. Let's say transaction monitoring for a looking back over a period of time and a set of data. They can trial and test the solution and compare it. So how many alerts and SARs were raised, how many good alerts were raised. But I think also one area they can't necessarily compare, but his level of comfort is the unknown unknowns. Yes, you need to be able to match against the knowns, absolutely. But what organizations are really looking at is how can we identify unknowns, risks we had, but we didn't know we had. And then with effectiveness, that's where you've got to work with the operational departments, AML operations, sanctions operations, other areas to say, the alerts, the feedback coming from machine learning, is it better? The efficiencies, the creation of case files, the gathering of information, is it saving us in terms of time per case at the same level of quality? So I think there are measures there. And I think further what people are looking now, because of the vast volumes of data, is really how some of that can be automated and how automated models can be used to do the monitoring, improve to the organization, where they're not just getting a like for like, but they're actually getting a step change. And what we've seen in a number of cases is actually pleasant surprise, and then at first organizations are skeptical, but it is less alerts, far less alerts, but when they look at it, they're far less but better quality alerts, which lead to better decisions all around. So you gain the efficiency and actually the SARs you raised are more meaningful. And that's the whole point, really, to inform law enforcement regulators to prevent financial crime. So there are a number of measures, and organizations need to work on those, work with the vendors, and look at the different models there. So what I'd answer to that one.
Yeah, thank you, Colin. Colin, I have one more question. I know we're running short of time, but there is a question specifically to you from one of our audience. And I think the way it reads is, Colin, you mentioned that banks often think of low ROI on tech investments. Why is it banks are not able to realize the ROI, and what can they do differently to address the issue?
I mean, this is a whole topic, so I'll cover it briefly. I think in the past, what's happened is that solutions have taken far too long to implement. There hasn't been sufficient dialogue, and there's been too many factors which interrupt successful implementations. So it turns out that the data isn't good enough. It turns out that people's processes get too negatively impacted. So I think in the past have failed because there's been too many hurdles to overcome, and the timescales have been far too long. And when you get there, things have changed, but actually what you had isn't really so beneficial. So I think the things we spoke about today about, focusing on the area, agile, understanding the data, working in partnership, linking in with processes and the people side of it, I think all help to actually change that around and get a better return on investment. And also the idea of using APIs as opposed to big on-premises implementation and changes as well.
Great. Thank you, Colin and Sean. On behalf of Tokitaki, I would really like to thank the audience for your participation today. We got a lot of questions, so thank you all for sending them out. We really look forward to welcoming you to our third webinar, Federated Learning, Bringing Together Industry's AML Intelligence. This will be held on July 7th at 11 a.m. EST. As part of this webinar, all of the audience, we will send out the key learnings from the webinar as a small token of appreciation from Tokitaki. Do keep a watch on your emails. We would like to conclude here. Thank you, speakers and audience. It was a great discussion. Goodbye and have a great day.